Welcome back to XRP Economic Radar, where we cut through the noise to bring you the crypto news that actually matters to your portfolio. This week brought something we haven't seen in a while: genuine relief in the cryptocurrency markets. Bitcoin climbed back towards $62,000. Exchange-traded fund money started flowing in again after weeks of brutal exits, and a bombshell financial disclosure revealed that Donald Trump is holding more than $50 million in Bitcoin. But here's the critical question everyone's asking: is this recovery the real deal, or are we looking at what traders call a dead cat bounce? Stay with me, because the answer affects every single crypto investor, including those of you holding XRP, and the signals we're seeing right now could determine the next major move across the entire digital asset space. Let's start with where Bitcoin was just 7 days ago, because the contrast is striking. Last week at this exact time, Bitcoin was struggling to hold $60,000 after a painful correction that dominated June. The cryptocurrency spent the weekend moving sideways, trapped in what felt like market limbo. Neither the bulls pushing prices higher nor the bears driving them lower could take control. It was the kind of stalemate that makes traders nervous, because when pressure builds like that, something eventually has to give, and give it did. The real action kicked off at the start of the business week when Bitcoin tried to recover, pushing towards $60,700. But that attempt was quickly rejected. Sellers jumped in hard, and the pressure just kept building from there. Tuesday brought the kind of day that tests investor conviction. Bitcoin didn't just decline, it took a beating alongside the broader financial markets. The S&P 500 dropped, the Nasdaq fell, major technology stocks sold off. And Bitcoin? It dumped below $59,000, sliding toward $58,000 on some exchanges. That marked the lowest point of the week, and for many investors watching their portfolio values shrink, it felt like the June correction was extending into July with no relief in sight. The sentiment across crypto communities was fragile at best, with many wondering if we were heading for another extended downturn. But something important happened at that $58,000 level, something that changed the trajectory of the entire week. That support held firm, and when support holds during a sell-off, especially at a psychologically important level, it sends a signal to the market. Bitcoin bounced back, and it didn't just creep higher. It quickly reclaimed $60,000, then continued pushing towards $62,000 as buyers returned with renewed confidence. But here's what made this recovery particularly significant. Spot Bitcoin exchange-traded funds finally saw money flowing back in after a brutal streak of outflows. For weeks, these ETFs had been hemorrhaging capital as investors pulled money out. That reversal represents more than just numbers on a screen. It represents institutional sentiment shifting, at least temporarily. When the so-called smart money starts flowing back into Bitcoin ETFs, it creates a foundation for sustained price movement that retail traders alone simply cannot provide. Now you might be wondering, I hold XRP. Why does Bitcoin's recovery and ETF flows matter to me? Here's the connection, and it's crucial to understand. Bitcoin doesn't trade in isolation, and neither does any other cryptocurrency. When Bitcoin demonstrates strength and attracts institutional capital through vehicles like exchange-traded funds, it lifts the entire cryptocurrency market. We saw this play out perfectly this week. Altcoins, including XRP, were able to follow Bitcoin's recovery. Some of them posted even sharper increases. Ethereum recovered strongly and moved back toward $1,700. Solana was among the best performers with a double-digit weekly jump. And XRP itself climbed 7.2%, moving back to $1.12. Other major altcoins like Dogecoin, Cardano, Stellar, and Hyperliquid also joined the rebound. The total cryptocurrency market capitalization recovered some of its recent losses, climbing back to $2.22 trillion. This coordinated movement across the market shows how interconnected these assets are, and why Bitcoin's health matters to every crypto investor. The week wasn't just about price action and technical levels. Major headlines dropped that could have longer-term implications for the entire cryptocurrency space. Donald Trump's latest financial disclosure revealed he holds more than $50 million in Bitcoin, a revelation that immediately reignited intense debates across political and financial circles. This isn't just interesting political news. Trump has positioned himself as a pro-crypto candidate, and his substantial Bitcoin holdings add credibility to that positioning, while raising questions about potential conflicts of interest and future policy directions. Meanwhile, FBI Director Kash Patel amended a disclosure associated with MicroStrategy's stock, the company famous for its aggressive Bitcoin accumulation strategy. And in a move that signals the continued evolution of traditional finance meeting blockchain technology, Securitize made its New York Stock Exchange debut and launched tokenized shares on both Solana and Avalanche. These aren't isolated incidents, they represent a pattern of increasing integration between traditional financial systems and cryptocurrency infrastructure. Speaking of that integration, one of the most fascinating developments this week involves tokenized stocks emerging as what analysts are calling an altcoin lifeline amid a broader crypto market reset. A new report argued that tokenized stocks are becoming one of crypto's few genuinely bright spots, especially as persistent token unlocks and weak altcoin narratives continue wearing speculative assets down. The analyst outlined that Solana is currently dominating tokenized equity trading alongside Hyperliquid. Think about what this means. While many altcoins struggle to find compelling use cases beyond speculation, tokenized stocks represent real-world assets with actual value and regulatory clarity being brought onto blockchain infrastructure. This is exactly the kind of utility-driven development that could attract institutional capital and regulatory approval. For XRP holders, this should sound familiar. Ripple has long focused on real-world utility through cross-border payments rather than pure speculation, and now we're seeing the broader market recognize that utility-focused applications may be the path forward. But there's also a potential changing of the guard happening in the corporate Bitcoin accumulation space. Matt Hougan, the CEO of Bitwise, shared an important perspective this week. He said that MicroStrategy's role as one of the largest corporate buyers of Bitcoin is likely going to fade, especially as the next cycle could be led by different types of institutions entirely. We're talking about banks, asset managers, pension funds, and sovereign wealth funds. This represents a fundamental shift in who's driving Bitcoin demand. MicroStrategy, led by Michael Saylor, pioneered the corporate Bitcoin treasury strategy and became famous for aggressive buying even during market downturns. But if Hougan is right, the next wave won't be individual companies making bold bets. It'll be massive traditional financial institutions integrating Bitcoin into their standard operations. That kind of institutional adoption would dwarf anything we've seen so far and could provide the foundation for the next major bull cycle across all cryptocurrencies. We're already seeing the early stages of this institutional shift. Standard Chartered just became the very first major global bank to offer direct USDC minting and redemption services to institutional clients through its banking platform. The service launched with Circle in Dubai's International Financial Center. Let that sink in for a moment. A major global bank is now directly facilitating stablecoin transactions for institutional clients. This isn't a crypto-native company or a fintech startup. This is a traditional banking giant recognizing that stablecoins are here to stay and that their clients demand access. But Circle, the company behind USDC, might be facing one of its toughest challenges yet. Experts warned this week that OpenUSD, a new stablecoin backed by financial and payments giants including Visa, MasterCard, BlackRock, and Coinbase, could seriously challenge Circle's dominance. When companies of that caliber unite behind a competing stablecoin, it signals both validation of the stablecoin concept and intensifying competition for market share. For the broader crypto ecosystem, including networks like the XRP ledger that facilitate fast, low-cost transfers of digital assets, this competition among stablecoins could drive innovation and adoption. Not all the news this week was positive, and it's important to cover the full picture. A group of 1,700 UK investors sued Binance and its former CEO, Changpeng Zhao, in London's High Court. The plaintiffs are seeking roughly $200 million in damages, claiming the exchange sold unauthorized derivatives products. This lawsuit represents ongoing regulatory challenges facing the cryptocurrency industry, particularly around derivatives and leverage products offered to retail investors. These legal battles matter because they shape the regulatory environment that all crypto companies operate within. They also remind us why regulatory clarity is so valuable. Ripple's ongoing efforts to work within regulatory frameworks and achieve clarity around XRP's status look increasingly wise as we watch other companies face expensive legal challenges. The outcome of cases like this will influence how regulators worldwide approach cryptocurrency exchanges and what products they're allowed to offer. Finally, let's address the question that really matters going forward. Tim Sun from Hashkey Research offered important perspective on Bitcoin's recent exchange-traded fund outflows before this week's reversal. He suggested that the outflows may reflect capital rotating into artificial intelligence stocks, semiconductors, and GPU-related companies rather than a complete collapse in risk appetite. In other words, investors weren't necessarily fleeing risk assets altogether. They were chasing the next hot sector. This analysis is crucial because it helps explain both the recent weakness and the potential for recovery. If capital was simply rotating rather than disappearing, it can rotate back. We saw some evidence of that this week with ETF inflows returning. But here's the reality check. The bulls were finally able to stop the bleeding this week, and that's genuinely positive news. However, this doesn't mean the worst is definitely over. Bitcoin still needs a decisive breakout above pivotal levels around $70,000 to prove this was more than just a temporary bounce. Until we see that kind of sustained strength, the market sentiment remains fragile, and another downturn is absolutely possible. So where does this leave us as we head into the next week? Bitcoin recovered from 58,000 to 62,000. Exchange-traded fund inflows returned. Altcoins including XRP participated in the rebound. Major institutions continue integrating cryptocurrency infrastructure into traditional finance. Tokenized stocks are gaining traction as utility-driven blockchain applications, and the regulatory landscape continues evolving through both cooperation and conflict. For XRP holders specifically, this week demonstrated once again how the entire cryptocurrency market moves together during major shifts. Bitcoin's recovery created space for XRP to gain 7.2%. And continued strength in Bitcoin would likely support further gains across quality altcoins. The integration of tokenized assets onto platforms like Solana and Avalanche shows the broader trend toward real-world utility that aligns with Ripple's long-term vision. And ongoing regulatory developments, both positive like Standard Chartered Stablecoin service and challenging like the Binance lawsuit, continue shaping the environment where all cryptocurrencies operate. The coming weeks will be critical. Can Bitcoin hold these gains and push toward that $70,000 level that would signal genuine strength? Will exchange-traded fund inflows continue, or was this week just a brief pause in a longer outflow trend? How will traditional financial institutions continue integrating cryptocurrency infrastructure, and what does that mean for networks built for institutional use? These are the questions we'll be tracking closely here at XRP Economic Radar. If you want to stay informed on exactly how these macro developments affect XRP, Ripple, and the broader cryptocurrency markets, make sure you're subscribed to this channel so you don't miss our coverage. Hit that like button if you found this weekly update valuable, and drop a comment below with your thoughts. Do you think this recovery has legs, or are we heading for another test of lower levels? Our community wants to hear your perspective. Share this video with other crypto investors who need to understand what's really happening beyond the price charts. We're building something special here at XRP Economic Radar, a place where you get credible, comprehensive cryptocurrency news without the hype and speculation. Thanks for watching, and I'll see you in the next update.